Hi again. Welcome back for our day 2 of Fintech Sandbox's 10th demo day. I'm Kelly Fryer, Executive Director or CEO of Fintech Sandbox. If you joined us on Tuesday, we're excited that you came back to see even more demos again today. This year, Fintech Sandbox is featuring 12 powerhouse startups over 2 days. In case you weren't able to join us earlier this week, Fintech Sandbox is a nonprofit that provides a leg up for fintech entrepreneurs around the world by providing them with free access to critical data and resources in order to build, test, and scale their early stage products through our Data Access Residency. We don't take any equity or fees from the startup, so it's completely free to them. This year not only marks Fintech Sandbox's 10th demo day, but also our company's 10th anniversary. We're proud to say that since 2014, nearly 350 startups and counting have been a part of the program, and we've built a truly global collaborative fintech community. Demo Day is an opportunity for Fintech Sandbox to bring our community together and feature just a few of the incredible startups that have come through our program recently. Fintech Sandbox is fortunate to sit at the earliest stages of fintech innovation and see products and emerging technologies just as they're being built and getting off the ground, really giving us and our partners a front row seat to the future of the industry. So we're excited to use this event to showcase those innovations and the products built and grown with access to data from Fintech Sandbox's amazing 40+ data partners. As you can see from this list, these are leading name data providers, and they generously provide data and infrastructure for free to some of the top fintechs in the ecosystem, all through Fintech Sandbox's Data Access Residency. In addition to data access, through Fintech Sandbox, our companies go on to grow their business and launch their product, with over 90% of companies securing new partners and customers after Fintech Sandbox, and 85% hiring additional team members. By not focusing on data costs, entrepreneurs are able to scale their companies and extend their runways, which is more important now than ever before. Now, before we dive in today, I need to spend a quick moment recognizing our small but very mighty team behind the scenes who has made this event happen. The Fintech Sandbox team is a group of such hardworking, passionate, talented folks that get things done. If you've not met them before, I hope you have the pleasure of doing so, because they are an amazing group. So I want to say a massive thank you to our Fintech Sandbox team: Brian Cabanban, David Savage, Elizabeth Thomas, B. Law, Jim Smith, Alan Sheehan, Elizabeth Heine, and of course, Sarah Biller and David Jegen. Now, since we don't take any fees or equities from our startups, Fintech Sandbox wouldn't be able to support as many entrepreneurs as we do without our generous sponsors. As a nonprofit, they support our mission, our founders, and fintech innovation. If you'd like to partner with Fintech Sandbox and help us usher in the new era of innovation, please reach out to our team. Now, a couple of quick housekeeping and logistics before we get into the demos, in case you didn't join us yesterday. First, feel free to say hi and introduce yourselves in our chat on the right-hand side of your screen. And you can also see profiles of each startup in the tab, the startup tab at the top of the screen. We have 6 demos in store for you today, just like on Tuesday, but with a new set. Each company will present for 5 minutes, including showcasing how their product actually works. While presenting, someone from each company will be on hand to answer typed Q&A. So feel free to add in questions via the Q&A tab on the right-hand panel. Just include which company the question is for so that we direct it to the right team. There's also a poll tab that we'll use to track interest in each company. So if you'd like to follow up or connect afterwards with a company, the poll will pop up on the right-hand side. Be sure to submit the poll for each company you're interested in. And then in between the demos, you'll also get to hear insights from financial services and innovation leaders on trends going on within the industry. Today, that includes senior executives from Rise, created by Barclays, discussing the importance of climate fintech, MassMutual talking about the value of emerging innovations for the financial ecosystem, and Fintech Sandbox's very own David Jegen on his excitement about the digitization of private markets as an investor. Now, today's demos are all about emerging technologies and the future of capital markets. You'll hear from entrepreneurs who are leading the financial evolution by leveraging technologies like AI, quantum computing, and more to change how we work and invest. First, we'll start with solutions helping financial enterprises be more efficient and effective in their workflows by leveraging data science for both regulatory and compliance, as well as investment managers. Then we'll dive into quantum computing's application in financial services, specifically utilizing it for currency exchange and treasury management. And then we'll close out looking at future tools for investing and risk management across alternative assets and tax-managed investment accounts, and then managing commodity volatility through parametric insurance. These products truly reimagine how the industry solves these challenges at scale, and we're so excited to show them to you. With that, let's get on to the demos.
Hi, I'm CK, founder and CEO of Revelata. We make investment professionals bionic by automatically unlocking the information that's buried deep inside financial texts and across documents. Our AI platform understands financial language and concepts, enabling us to take unstructured financial documents and automatically discover and extract structured data from them. By making this hard-to-get information easily accessible, we enable the fast path to deeper insight and better decision-making. Here's a typical scenario. Alice is an MD at a bank. She needs to drive high deal velocity and volume, meaning tight deadlines for her team. This time, Alice needs Bob to pull some comps. Now, in this example, a key piece of Bob's analysis rests on understanding the monthly active users of Meta over time. Unfortunately for Bob, this key performance indicator, or KPI, isn't in any existing database. So he'll have to go to Meta's most recent SEC filing and look for the reported value. When he finds it, he'll manually copy and paste it into Excel. And he'll repeat this until he's formed the entire time series. Then it's on to the next KPI. Now, analysts like Bob, who already work very long hours, spend some 30% of their time on this kind of tedious work. This is equivalent to an incredible 15 analyst work weeks per analyst per year. Now, for the firms, this is a well-known bottleneck on efficient execution. And for the analysts, their frustration is rightfully summed up in this brutally honest customer quote. Revelata's first product, Deep KPI, solves this problem. Our AI platform automatically surfaces KPI time series buried within billions of pages of SEC filings. Now Bob simply has to enter some search parameters over the meta ticker and hit the go button. All the time series that we've extracted are instantly available. Bob simply has to filter for monthly active users, or MAUs. And you can audit any data point by clicking on it. This will show the exact sentence in the source filing from which the data point was extracted. Bob's pretty happy. But Bob notices in our database a similar but unfamiliar KPI called MAP, or monthly active people, a KPI that's specific only to Meta. Since it's highly relevant, he selects both time series and exports them to Excel, where he can incorporate them directly into his own models. Bob or his management chain can also audit every data point from within Excel by simply clicking a link. Now, all the data available through our web app is also accessible through our data API, which will be released later this year. Revelata's technology truly makes Bob bionic by dropping the time and cost of surfacing such hard-to-get data by 2 orders of magnitude, enabling even small firms to be more competitive. Our proprietary financial language models are trained to be reliable, trustworthy, and explainable, and are purposefully not generative AIs, so they don't suffer from hallucination. With Deep KPI, Bob no longer has to spend 15 weeks a year on grunt work, and can instead redirect that effort to the more elevated work of providing analysis to Alice. Alice, in turn, with a team that's now 30% more efficient, can move much faster and go after more deals. Now, Alice and Bob highlight how Deep KPI works for iBanks, but hedge funds, asset managers, PE firms, and others can also benefit in much the same way. We're currently pursuing a product-led growth model where we land individual subscriptions first, and then later expand into enterprise-wide licenses. Last year, we raised a pre-seed with a grant from the National Science Foundation and backing from Jazz Venture Partners and industry insiders. We launched our private beta in Q1 this year, and will soon open up our public beta in Q3. We expect to close a seed round in Q4 to drive towards our broader vision of bionic finance, where the growing volume and richness of data is simplified by an increase in what we can automate. And ultimately, we want Revelata's platform to be where accurate and auditable work ranging from surfacing data to day-to-day analyses, and even insight generation can be done by simply talking to our AI. And we want to extend these capabilities beyond equities into other instruments, such as embedded derivatives, private data, and beyond. Now, a big thank you here to Fintech Sandbox for helping to accelerate these efforts with access to crucial data feeds from partners such as FactSet and S&P Global. We hope you enjoyed learning more about Revelata and our mission to make investment professionals bionic. If you can't wait to try us out, we invite you to join our private beta. Simply sign up at deepkpi.com with the code DEMODAY10. At the same time, we're actively seeking enterprise pilots and partnerships. For these, please connect directly with me on LinkedIn or through email. Thank you.
In 2011, the Federal Reserve and OCC issued a new regulation, SR 117. This regulation stipulates all financial institutions must govern and validate their models. The current practices of keeping up with this regulation are challenging. Data scientists create innovative, sophisticated models, and compliance teams manually ensure these adhere to regulations. These are two completely different personas speaking completely different languages with different goals and motivations. Model validation is a frustrating manual process, which is time-consuming and costly for even the simplest models. Add in machine learning, black box AI models, and heightened scrutiny from the regulators, this becomes even more complex. How can we tackle this friction point? How can we streamline this process to make it more suitable for the world of AI? I'm Maya, and I am the CEO of Proov.ai, where we bridge the gap between data science and compliance teams. Proov.ai transforms model risk management, ensuring compliance and opening up AI's full potential to the banking industry. This is the Proov.ai platform, a one-stop shop for model validation. Model comes in on the one side, magic happens, and then on the other side, we get everything compliance teams need to sign off on the model, and everything regulators need to be assured that the bank is in line with the latest standards. These elements are the different components included in the regulation. The core of our technology is AI technology. We use GAN, generative adversarial networks, to generate synthetic data. These diverse data sets representing real data form the basis for testing against various protected features. We train this data on comprehensive data sets, which we were lucky to access through the Fintech Sandbox residency program. Deep learning is used to conduct stress tests and fairness assessments in a very deep level. LLM models generate insightful documentation. Developing this full platform is a complex challenge, and we kicked it off with a fairness solution. Starting with the fairness solution made sense because fairness assessments are crucial for all financial institutions. It lets us test our assumptions, show off our synthetic data tech, and deliver value to customers, potentially creating revenue as we continue developing the other components. Let's start the model validation journey. Add a new model to the Proov.ai platform. Upload your data set in a secure environment. The synthetic data is then generated based on that uploaded data. Once ready, the model is executed on the Proov.ai data, providing instant insights. The Proov.ai ready-to-use summary metrics for detecting bias and disparate impact. This is the full fairness dashboard. We offer an intuitive visual layout so you can quickly identify significant biases and areas requiring attention in the model. Experience simplified model feature evaluation with Proov.ai. Easy to understand graphs for detailed insights. Explore performance metrics and to gain a deeper understanding of the robustness and fairness of your model decisions. Dive into each of the model's features. Potential fair lending issues are clearly highlighted. In the old school process, this detailed analysis would have taken weeks to compile. With Proov.ai, we accomplish this instantly at a push of a button. Our plan and journey, currently nearing the 6-month milestone, our strategy is focused on deploying a successful proof of concept with our design partner, a major FDIC-regulated banking-as-a-service provider. This phase is all about proving our solution's effectiveness and gaining traction. As our technology evolves, we aim to broaden our reach, onboarding additional bank and fintech partners. These partnerships are valuable in creating a ripple effect that serves as a powerful distribution channel, from our bank to its fintech clients to their additional banking partners and so on, forming a web-like expansion strategy. We are actively seeking additional design partners to collaborate on delivering our cutting-edge Gen AI-based model validation platform. Help us connect with fintech leaders in risk or compliance who are eager to shape the world of AI and compliance. Reach out, together we'll make a collective impact. Thank you.
Hi, I'm Brian Cabanban, Partnerships Director at Fintech Sandbox. Thanks again for joining us for Day 2 of our Demo Day 10 events. At Fintech Sandbox, I help connect our corporate partners to our vibrant ecosystem. Our partners get unparalleled exposure to cutting-edge fintech startups, networking opportunities, thought leadership, and also the chance to drive innovation in the fintech sector. Thank you to all of our corporate partners for helping Fintech Sandbox advance financial innovation and also lower barriers for early-stage startups. We're already off to an incredible start. The first 2 demos we've seen so far showcase products to help financial enterprises be more efficient and effective in their workflows between regulatory compliance and processing unstructured documents for investment managers. Quick reminder, if you haven't been already, be sure to check out the poll tab if you'd like to follow up with a specific team and learn more. We open up a poll during each pitch if you'd like to connect afterward with any or all of the companies. And you're welcome to ask questions in the Q&A tab. Just note which company you're asking. Okay, up next, and I'm really excited about this, we have the first of our FinTech in Focus spotlights, touching on key themes and insights across FinTech. MassMutual's Sears Merritt will be discussing the value of emerging innovations in the industry today. And then we'll dive into even more demos, including quantum computing, alternative investments, risk and parametric insurance, and more.
Hi, everyone. I'm Sears Merritt, Head of Enterprise Technology and Experience at MassMutual. I hope everyone is enjoying Demo Day. The diversity and broad representation of startups being featured this year is truly impressive. It highlights that while fintech is booming in Massachusetts, we need to open more opportunities around mentorship, networking, and education for individuals who are underrepresented in this space. MassMutual's work with Fintech Sandbox is about opening doors for everyone trying to break through in the fintech ecosystem, not just in Massachusetts. That means participating at key events like Boston FinTech Week, New York FinTech Week, Demo Days, and FinTech meetups across the country. Our involvement gives us the opportunity to engage with some of the leading minds in fintech as they develop their businesses and their careers. The Fintech Sandbox's Data Access Residency program is important because it provides startups with access to real-world data to develop innovative products and services. The entire ecosystem, including MassMutual, can benefit from that innovation. As members of the Fintech Sandbox Advisory Board, the Mass FinTech Hub, as well as founders and board members of the Mass Challenge FinTech program, we are excited by the partnerships that we established with fellow industry and startup leaders, and truly proud of the relationships we have made with top academic institutions. Every time I attend one of these events, I learn something new, and I'm reminded of how quickly fintech solutions progress. MassMutual's vision is to provide financial well-being to all Americans, and it's so encouraging and inspiring to know we aren't in it alone. Many in the US and around the world lack access to basic financial services. Things like bank accounts and debit cards are out of reach for many due to their location, their mobility, and their socioeconomic status. Fintech innovation is helping enable financial inclusion for those who have historically been excluded by creating accessible and affordable tools for the future. These advances are helping consumers make better decisions to build wealth and create secure financial futures for themselves and their families. So thank you all for the role you are playing to make this happen. For businesses, fintech promotes digital enablement, ease of doing business, customer centricity, and so much more. We're thankful for incubators like the Fintech Sandbox who provide us with access to startups like yours that are solving real world and real business challenges, while also attracting new investments in regional startups, helping Massachusetts become a leader in fintech globally. It's time for everyone to join the disruptors or be disrupted. We're excited about what the future holds for this powerful group of thinkers and doers, and I truly look forward to listening to more exciting pitches and discussions over the next few days. Good luck.
Hi, everyone. My name is Shantanu, and let's talk about how Boston Quantum is reimagining what computing can do. We are disrupting the financial industry with the speed and scalability of quantum computing enterprise software. To do so, we've assembled a talented team with deep technical and business expertise. With 3 MIT PhDs and 2 MIT MBAs, we have experience across quantum computing, software engineering, finance, consulting, and more, as well as a number of talented interns and mentors. We are interested in currency markets. These markets are more complex today than ever before, with hundreds of prices spread across tens of exchanges. This complexity leads to mispricing in exchange rates. And from this mispricing, we can find opportunities for arbitrage profit. This is the idea that you can start with $1, trade in exchange through a cycle of other currencies to end up back where you started with more than $1, as well as better effective exchange rates. This is the idea that you can start with $1, trade and exchange through a path of other currencies to end up with a better effective exchange rate to Australian dollars. However, these markets are also moving faster today than ever before, and so these opportunities really only last for about 200 milliseconds. In this time, we have to stream data, detect these opportunities, and place trades to capture these opportunities. Incumbent solutions that our clients have tried to build in-house, for example, take roughly 10 seconds to do this when scaled up to networks of hundreds of prices. Our solutions take 30 milliseconds to do this, giving us enough time to not only detect these opportunities, but also capture them. So at a high level, what we're building here is an end-to-end reserve management solution. Our clients have portfolios of liquidity across several currencies, from hedge funds to cross-border payment companies and investment banks and more. And by finding and capturing complex mispricing, we're able to grow our clients' currency reserves while keeping them liquid with arbitrage, as well as enable the transfer of liquidity from one currency to another with best-in-class effective exchange rates. We do this by packaging our proprietary suite of quantum-inspired, and cutting-edge classical optimizers within our arbitrage engine. This engine sits within our end-to-end infrastructure, where we handle streaming from over 50+ brokers today, detect these opportunities, and execute trades across these brokers. This gives us the versatility to unlock novel trading frontiers with both the quantitative as well as the more traditional clients. And our onboarding time in digital asset exchanges, for example, is 2 weeks with no technical lift required from our client. To our clients, we expose the streamlined API. We essentially give them an engine, and they can tune the knobs of this engine by controlling which currencies, exchanges, and execution thresholds above which to execute. Then, by turning the keys of this engine, they can start to see these opportunities come in and see a live trade log of which trades are being placed. Our clients can also integrate this API within their own technical stacks using SDKs in whichever language they prefer. We have 5 institutional clients in FX and crypto reserve growth. With these clients, we're already in production. Here's a small sample taken from this past month with one client where we traded 6.5 million in notional volume. 99.8% of our trades, our limit orders, were fulfilled, leading to a 22% annualized return for this client on their portfolio. What we're seeing is that this opportunity is quite fragmented and client-specific based on markets and pricing. And so with each client, we have a profit share plus a volume tiered subscription fee, allowing us to align incentives with each client. We also have one institutional client in cross-border payments. With this client, we're exploring the use case of being the best-in-class currency exchange rate engine using our client-specific rails. We benchmarked against Wise, OFX, and MoneyGram, and we found that we're able to provide better exchange rates than these best-in-class options. And so we want to be the engine for the likes of Wise, OFX, and MoneyGrams of the world. This is exactly the use case we're exploring with this cross-border payments company. And we're already seeing that we can find better effective exchange rates than this cross-border payments company 91% of the time. We're the blue, our client is this orange. And so this is quite exciting for both us as well as for our client. So we're in growth mode. We've secured clients, performed profitable trades, reached 24/7 production. We have 500,000 deployed across our clients today, and we have plans to scale up to 20 million deployed by the end of 2024 and 200 million deployed by the end of 2025 by increasing volume with our clients, as well as by increasing the number of brokers, supported brokers that we have on our platform that are actually being used in production. Shomik and I started building quantum computing hardware and software nearly a decade ago because of the potential it has to use the underlying physics of our universe to solve highly complex problems across industries. That's exactly what we're doing. We're starting with reserve management, but we believe the technology, the underlying technology we're building can be applied across the financial industry and eventually beyond the financial industry across the automotive, pharmaceutical, and energy sectors. If this vision excites you, book a meeting with us today to become a partner or to talk about our first institutional round. Thanks so much to all these programs that have supported us, especially Fintech Sandbox, which really allows us to give us a perspective, a telescope into markets before investing into the infrastructure needed to really explore these markets. Thank you all so much for your time, and join us as we reimagine what computing can do. Thank you.
Hello, everyone. My name is David Jegen. I'm a co-founder of Fintech Sandbox and managing partner with F Prime Capital. And I am so excited I get to say a welcome and a greetings to everybody here joining us for the 10th demo day, which I hard to believe in some ways that we are 10 years into Fintech Sandbox. And many of you may have joined my partners and I, and my co-founders in our first demo day. But when I think about the mission of Fintech Sandbox to aggregate data and make it available for fintech startups to build applications and services, I really think that is as relevant today as it has ever been. And when I look as an investor, what has happened in fintech over the last 10 years, we have startups that have built and solved problems and introduced tooling in the front office through to the back office as new tools like banking as a service, payback as a service, lending as a service, card issuance. And all of these have made it easier for fintech startups to build. And yet the data that they need to build many of these applications and services is probably as costly and time-consuming or hard to get as it has ever been. And yet the need for data has never been greater. We still need it for the traditional reasons we set out to address, like building better credit underwriting models, analyzing consumer cohorts, building capital markets, trading applications. With AI, as we've all seen, there's a large need for greater quantities and more variety of data to build those models and build the tooling for AI. So as I look back over the last 10 years and where we are, I think I'm just delighted that Fintech Sandbox has an opportunity to partner with and help hundreds of fintech startups, and very kind of moved that this mission exists today and we'll be able to carry that forward, hopefully helping many more startups along the way. So in the time I have left, I was asked just to share a few thoughts on an investment theme that I find very exciting right now. And I wanted to say a few comments about the digitization of private markets. And that means digitization and automation of venture capital, private credit, private equity, real estate. As many of you know, this has become an enormous industry. It's $16 trillion of assets under management and growing. But there's multiple forces at work that are stressing the tech stack and driving the investors and the general partners managing the funds to automate traditionally people and paper-based processes. Forces include investors that are putting much higher allocations of their portfolios into alternatives, taking the lead from institutions and high net worth investors over the last few decades. There is a search for retail investors from traditional managers. You can think of Blackstone as one example, the first private manager to cross $1 trillion in AUM. And now 25% of that AUM comes from retail investors, up from almost 0% a couple of decades ago. And then we also have new fund managers like Franklin Templeton, Fidelity that are entering and launching private funds for the first time. And you can imagine when they launch those funds to the retail investors, it's not to tens and hundreds of investors. They're approaching thousands and tens of thousands of investors. And the consequence of all of this is that the people and paper around which the onboarding processes, the fund administration and accounting, and the data sharing has been built has to change. And as an investor, when I see an opportunity to digitize a historically manual set of processes, and I look at that and feel like there's an opportunity to build a new tech stack in that, like that is an exciting category. And I know many of you who are joining Demo Day today probably share that thesis and share that excitement. But there's been some great startups. I'm on the board of a terrific company called Canoe Intelligence, which is at the center of extracting alts data and making that available to the industry, to investors. But there's many other startups, including some Fintech Sandbox startups like Cobalt in portfolio monitoring that was acquired by FactSet, EquityZen, Rialto, and others. So with that, I will say I hope you enjoy the 10th anniversary and the 10th Demo Day, and that I'll get to continue the conversations with all of you over the next coming weeks and months. Thank you.
Hi, my name is John Hill, and I'm the co-founder and CEO of Quorus. Quorus allows asset managers to offer their investment strategies in custom, tax-efficient investment accounts without the operational headache of overseeing tens of thousands of individual portfolios. Over the next 3 years, custom investment accounts are projected to have the highest growth rate of any investment vehicle, outpacing both mutual funds and ETFs. Sometimes referred to as direct indexing, these accounts use a mix of quantitative methods and automation to build portfolios that track a target investment strategy with individual securities. Custom investing improves upon ETFs and mutual funds in 3 key ways. First, it can improve after-tax returns by up to several hundred basis points per year. Second, it unlocks better portfolio diversification. Finally, it allows the investor to align their portfolio with their personal values. While this product creates growth opportunities for asset managers, it also presents a scalability challenge. Few managers have the infrastructure to profitably design and manage tens of thousands of unique taxable accounts every day. Quorus provides asset managers a scalable way to offer their strategies in a customizable investment account. Our process starts by working with the asset manager to develop a unique tax methodology for their investment strategies, balancing tax alpha with the manager's traditional investment alpha. We then design the offer, including how the asset manager will distribute their strategies. Options range from a white label advisor web portal to integrating directly with Quorus APIs. Once launched, we oversee client portfolios and provide specialized sales support to the manager. Our go-to-market model is to partner with the asset manager, combining the best of their investment methodology and distribution footprint with our scalable, customizable accounts. Our demo today will walk through one aspect of the Quorus platform, how a financial advisor can use Quorus to create a custom portfolio for their client. Every advisor client of our asset management partners receives a login to Quorus and can use this portal to create and monitor accounts. To create a new account, called a sleeve, we'll select the Create Sleeve button. The advisor then enters specific information about the client and selects the desired target strategy, in this case, the O-Shares Quality 500 Index. If the advisor wishes to define any client-specific customizations, such as ticker or ESG-based screens, they can do so. Once the account is designed, we generate a preview of the account for the advisor. We do this by running a real-time portfolio optimization based on the client information, the target strategy, and our proprietary methodology. After a portfolio is generated, the advisor is presented with information about how the account will be invested. Once the advisor is comfortable, they submit the portfolio to Quorus, who begins trading the account. For every account Quorus manages, we run a daily portfolio optimization to determine if there are any opportunities to generate tax savings or rebalance the account. If so, the Quorus team makes the trades. Client reporting is updated daily, giving advisors real-time information about their accounts and the tax value generated. Our data partner is FactSet, whose data we use throughout our process. Quorus's business model is asset-based fees. Asset managers set the price of their strategies, similar to an expense ratio, and Quorus debits the fees from client accounts quarterly. Quorus earns a percentage of revenue through a revenue share agreement. We are in market with 6 asset managers and 3 advisor teams. These partners sought out Quorus because they recognize the importance of bringing a product to market and value having a partner to handle user experience, reporting, and ongoing portfolio management. A product had recently shared, we saw custom investing, but we didn't know how we could participate. You give us that answer. As we look ahead, we continue to deepen relationships with our partner firms and expand distribution. We also continue to work with a number of firms in due diligence and offer design. We look forward to bringing these relationships to market this year. Finally, we continue to add new partner firms. We value working with firms who are eager to roll up their sleeves and co-design a product that fits the unique needs of their business. As investor interest in custom portfolios continues to grow, it's imperative for asset managers to consider how they will position their business. If you're an asset or wealth manager and are curious what a custom portfolio offer could look like for you, please reach out. We'd love to show you. Thank you for your time.
At Alt Finance, we are a pioneering AI-powered data science company delivering real-time data insights on the trading of alternative assets. Meet Mark Peterson. He invests in technology stocks, treasury bonds, and real estate. He also invests in classic cars, wine, and whiskey. With the first 3, Mark can easily track his portfolio valuations with traditional software solutions on the market. However, with classic cars, wine, and whiskey, he's missing valuable market data to effectively manage these assets. Mark is not alone. As a collector, he works with an insurance agent, wealth manager, and asset manager who all need market insights, whether they're helping him to collect, sell, trade, insure, or finance these investments. The global alternative assets market is sized over $1 trillion. And this includes the collectibles market at $442 billion across wine and spirits, handbags, fine art, jewelry, and classic cars. Alt Finance uses AI and ML-powered data science to help analysts, investors and insurers manage alternative assets with real-time data insights. We do this by aggregating, cleaning, transforming, and building predictive pricing models, which provide instant insights on the trading of alternative assets. With Fintech Sandbox, we've had the opportunity to pull in traditional live market data on currency exchange rates and inflation rates to contextualize and normalize the data for a 360 view of the markets. Let's take the use case for asset valuations. In this instance, Wendy is looking for investment opportunities in the classic car market, and she wants to understand pricing patterns in the secondary markets. She needs versatile data feeds to examine these in detail. If she's using a FactSet terminal or modeling these in spreadsheets, she can connect directly to alt finance data feeds, which power her workflow. Or if she's using cloud computing tools like Amazon Forecast, she can connect to the alt finance data source and power her machine learning models. Insights from alt finance give users a unique competitive advantage. For example, we studied price patterns for classic cars and noticed a 50% year-on-year drop between January 2023 and 2024. With these insights, users can proactively make financial decisions that optimize returns and de-risk exposure. As another use case, let's look at insurance valuations. Here, Andy is looking to optimize his company's insurance coverage of luxury assets. With the increasing pressure from regulatory changes and weather events, the frequency of claims have increased and caused a volatile effects on the company's profit margins. Andy can connect to live insurance market insights using dashboard visualization tools like QuickSight, Tableau, or Power BI. Every morning, Andy and his team can examine the range of insured policies powered by alt finance to see and understand the insured values and how they change in comparison to market valuations. With advanced insurance valuation tools and solutions like this one provided by AWS, Andy and his team can also connect to alt finance directly within the console and power AI models for a complete automated workflow. Our competitors provide generic market data or one-time appraisals that are quickly outdated. These are usually delivered with searchable listings. We're doing things differently by delivering versatile real-time data feeds and valuation tools that help financial institutions to scale with enterprise cloud architecture. Just as Bloomberg disrupted the equities market in the 1980s, we're transforming how alternative assets are tracked, and we're starting with collectibles in phase 1 and private debt solutions in phase 2. At Alt Finance, we're building the next AI-powered, multi-billion-dollar data science market intelligence giants in this industry. Thank you.
Hi, I'm Suma Kumaraswamy, Head of Global Experimentation and Innovation at RISE, created by Barclays. RISE is a global community of the world's top innovators working together to create the future of financial services. Our mission is to connect technology, talent, and trends from across the RISE ecosystem to accelerate innovation and growth in the financial services industry. By operating fintech workspaces around the world and through a virtual community where cutting-edge startups and scale-ups can connect, create, and scale their businesses, all backed by Barclays' global network of industry experts, mentors, investors, and partners. The world needs fintech like never before, and at RISE, we are especially excited about the billion-dollar opportunity for fintech to drive adoption of low-carbon solutions and technology, a sector we're calling climate fintech. So what is climate fintech? We use the term to describe organizations that build products leveraging a combination of climate finance and technology solutions, and that support efforts to mitigate climate change. climate fintech products range from quantifying a carbon footprint to embedding finance within a climate solution. The companies innovating in this space are addressing the significant challenges faced by both customers and businesses alike, who find switching to carbon solutions can be costly and complex. Now, climate fintech can make that switch more affordable and simpler than it is today. At Rise by Barclays, we believe that supporting entrepreneurs is key to making that adoption of low carbon technologies simpler, easier to implement, and more affordable. Climate fintech is a major growth area as innovators look to address real-world decarbonization where no one is disproportionately burdened by the cost of change. Climate fintech solutions can be grouped into 3 themes, each of which we explore in depth in our theses. The first one, carbon management drives understanding and enabling control of emissions. Second, being the direct mitigation, facilitates absolute reduction of user emissions. And the third, climate risk management measures and mitigates exposure to climate risk. Crucially, the second of these, direct mitigation, is currently seeing the least activity and attracting the least funding across climate fintech space. In our report, which contains a rich analysis of this exciting new area, delves into the space and also the types of companies leading it. As a bank, Barclays is committed to supporting the energy sector in transition. Our strategy focuses on providing the capital and the resources to support energy companies decarbonize. Barclays' open innovation strategy provides climate fintechs with the tools to engage, network, and experiment with the bank and with other top innovators. Through our Rise Created by Barclays proposition, we provide tailored accelerator programs and physical workspaces to support climate fintechs grow and collaborate with each other. Again, access to the global fintech ecosystem made up of cutting-edge startups and scale-ups through our physical locations in New York, London, and our virtual community in India. A capability allowing Barclays to engage and experiment with climate fintechs to tackle clearly defined business cases using synthetic and public data. Hopefully, I've whet your appetite to find out more, which you can do via our recently released Thought Leadership Innovation thesis on climate fintech. The thesis explores how the fintech ecosystem can play a part in tackling climate change. Our report highlights how one area of our industry, what we identify as climate fintech, could emerge to drive greater adoption of low carbon solutions and technology. If you're an entrepreneur, founder, or business keen to make an impact in this space, we encourage you to get in touch with us. We can be the partners and collaborators to help you understand the space and create or scale your impact. Please visit our website, rise.barclays, to learn about our Rise Startup and Growth Academy programs. And of course, download the report. We'd love to hear from you.
At Edge, we're building a parametric insurance program for commodity-linked businesses. So off the bat, I can tell you that this is a massive problem, and we've been able to lock LOIs from some of the most marquee food businesses, including FMG Group and McDonald's, Little Caesars, etc. And you may ask why. The reason is we're solving a very, very important problem that directly affects profitability and cash flows. So as you can imagine, price volatility is a massive threat to businesses along the commodity supply chain. This is best explained through an example. So if you take the example of McDonald's, they have massive exposure to a USDA published index called beef trim. Beef trim is a byproduct of a certain part of the live cattle that's ultimately used to make the burger patties. So as you can imagine, if the price of beef trim increases, the input costs into the burger itself increases quite materially. McDonald's budgets start to flip upside down, and they start to see profit margin erosion. And so it's a direct problem that impacts profitability. And so how are we solving this? We're building parametric insurance protection programs. And the way those work is actually very simple. So let's go through an example. So if you imagine you being a massive food chain like Texas Roadhouse, you have massive exposure to a certain cut of beef, you would log into our platform, select the index that's actually referenced in your physical contract. So it's a perfect one-to-one match. You would then select the type of protection that you want. And so if this is a fixed price spread, you know your business better than anyone else. So you know what price trigger points your margins really start to hurt. So if that price is $9.50, you select the duration. You also know how much you want to protect. We auto-generate a premium. And once you pay us that upfront premium, you get protection at the $9.50 mark. And if that trigger is hit during the life of the contract up to a certain limit, we pay you out automatically. So the product itself is very simple, very easy to understand from a customer perspective. It's a pre-agreed trigger. There's no margin. It's just that one-time fee. There's no claims process and there's no basis risk. On the back end, it's actually very complex to build. So what we're doing is we're ingesting third-party data sources that reference these specific indexes. And we actually build in-house best-in-class forecasts, price a risk from an insurance perspective, and construct a diversified portfolio across untraded commodities. And once we're able to do that, we are actually able to arrive at an appropriate risk price. And there's strong network effects because the more indexes we underwrite, the better diversified our entire portfolio is. In terms of how this works from the back end, so we're going to be a registered MGA. We're going to originate this business across all the target indices in untraded commodities. We're going to sit in the middle. We'll have a take rate of around 20 to 30%, and we pass on the balance sheet risk to reinsurance companies on the back end. For that, our ultimate measure of success is the loss ratio across the portfolio. And the lower the loss ratio, the more profitable the reinsurers are, the higher the cut of the revenue that we get. So the business model itself is quite easy and very simple to understand. And when you think about this opportunity, if you zoom out, look at the realm of untraded commodities globally, agricultural commodities, it's about a $3 trillion market. And so if you apply a conservative 5% premium at scale, this is a $150 billion annual GWP potential opportunity, which could translate at scale to a $35 billion plus opportunity for Edge. And what's more is that we're using this as a wedge to build an end-to-end vertical SaaS platform that companies across the supply chain can use to manage their risk, both before they execute protection and after. In terms of our go-to-market strategy, so we've assembled an inside sales team, founder-led sales, and have seen a lot of success with the larger corporates. There's also many channel partners, such as risk advisory firms, in these nascent untraded markets that could be perfect channel partners for us to distribute our product to mid-sized companies. Our initial target market is animal protein, dairy products, and organic produce. In terms of why we're able to do this in the first place, it's a combination of two things. One, data availability. So the actual untraded indexes that we're referencing in our contracts, those companies that have been reporting that data have only been around for 15, 20 years. And so only now is there a rich enough data set to underwrite and create a diversified portfolio out of. On top of that, we use advanced actuarial mathematics and underwriting techniques to come up with appropriate risk pricing. And if you think about the volatility over the past 5 years, it's been massive, right? And people talk about FX and interest rates, but volatility across commodity markets have been amplified even more. The final thing I'll touch upon is where we are as a company. So we built out our prototypes, have shown indicative pricing. We have a robust pipeline of over 1,000 well-vetted customers. We have our go-to-market channel partners and have also, engaged reinsurers quite meaningfully to secure the capacity. We just closed on our pre-seed round and looking forward to having you all join us in our journey at Edge. Thank you very much.
Hats off to the 6 powerhouse startups that we saw today. Taking these emerging technologies to build innovative solutions like these for enterprises and investors is so essential. This is what truly advances financial systems and moves industries forward. And thank you again to Sears from MassMutual and Suma from Rise for discussing their impactful perspectives on climate fintech and other emerging innovations in the ecosystem. At Fintech Sandbox, we know that launching and maintaining a fintech startup is not easy. So if you're an entrepreneur like these ones you saw here today and need help in accessing data for your product or growing to the next stage, be sure to apply for Fintech Sandbox's Data Access Residency. Over these 2 days, we've showcased 12 startups from Fintech Sandbox's Data Access Residency, just a small percentage of the nearly 350 startups we've worked with so far over the past 10 incredible years. We hope you got to see the breadth of fintech, variety of data usage, and global reach of Fintech Sandbox from this week's event. As a reminder, Fintech Sandbox doesn't take any equity or fees from our startups, and the only way we're able to do that is through the generous support of our sponsors. So thank you again for being a part of our mission. And thank you to our data partners for fueling fintech products and working with us to push innovation forward. If you're interested in working with Fintech Sandbox to build the future as either a data partner or a sponsor, please reach out to our team. Thank you all again so much for joining us over these past 2 days. We hope you've enjoyed them and have a great rest of your week. We hope to see you soon. Bye.